Big three stocks, three charts, three trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Stephen Guilfoyle. We call him Sarge, founder and president, Sarge 986. Thank you both for being here. Ben Lichtenstein there, ready with the charts. Sarge, before we get to AMD, your first trade here, just a big picture on the markets as we're pushing up against some highs here.
Well, I think the market has, even though we're pushing up against highs, has priced in too many rate cuts too quickly. I think they'll be sorely disappointed. I think the only thing that would bring forth rate cuts of the aggressive kind that has been priced in would be an economic collapse of a certain severity that we're not prepared for. So either outcome is really not good, probably for the marketplace. Either we get the severely negative outcome for the economy, or we get the rate cuts, or we get a lesser rate cut regime. So I think we're pushing up against places we shouldn't be in the market right now. I'm a little cautious going into the second half of January into February. I have to play the game. I have to make money. So yes, I'm net long, but I am strategically short in places as well.
I see. So I guess hedging a little or watching carefully. That being said, yeah, CEO Lisa Su behind the Advanced Micro Devices company, which has done incredibly well, hitting new highs. Your thoughts?
Yeah, I love Advanced Micro Devices, and I love Lisa Su. She's actually a Queens kid, just like yourself and I am. Lisa Su is probably the best in this business, maybe with the possible exception of Jensen Huang over at NVIDIA. Earnings are expected January 30th, looking for adjusted EPS of 77 cents on revenue of 6.15 bill. This will compare to year-ago comps of 69 cents on 5.56 billion, implying sales growth of almost 10%. We think the market has been busy pricing in upside AI-related forward guidance at the time of the next release. If you go to the chart, you're going to see, viewers will see a cup pattern that has been in place since early June. We got something of a head fake of a handle that developed around the 125 level, but then the stock accelerated to the upside, created a new handle at 151. My target price is 181, up from 156. That's where it was, with I see a possible upside all the way to 188. My pivot has increased to 151 from that 125. I add between the 21-day EMA and the 50-day SMA, which is between 147 and 133. And I will panic if we lose the 50-day SMA so that I can re-enter at the 200-day line down at 112.
Okay. What do you think of the chart here, Ben, when you take a look at AMD?
Yeah, Nicole, I think Sarge is spot on with this one. Let me show you why. Trend up on multiple time frames. I have the moving averages that he just mentioned as well, so we can conclude there. But let's begin with the 30-minute candle chart, bottom left, top right. I've identified a couple areas of consolidation that we formed along the way up. The reference point to help us determine trade value is moving. And in this instance, Nicole, again, a 30-minute candle chart, it's pretty clear to the upside, right? You've got 135, 140, 146, 157, and currently balancing around 65. So this is the area we're watching, referencing 157 as that kind of line in the sand in terms of continuing this momentum to the upside, working assumption value moving higher, so we don't want to see it taking out key levels that were established on the way up. Let's go all the way back to the, that last chart was the beginning of January on to current levels. Let's go back to the end of October last year. I've got a 60-minute candle chart here queued up, and you can see a similar pattern playing out. Again, areas of consolidation, value moving higher, 96, 120, 142, 182. Now, I want to show you the significance of this move that we're looking at here off the fall lows, because take a step back, you're going to see that we had been trending lower. Look at this. We're going all the way back to the beginning of 2022, end of 2021, 147, 115. We had been seeing areas of value moving at lower and lower levels. While we were balancing around 67, we were expecting a new area of value to form at a lower level, but referencing 92, look what happens. Here you can see the cup and handles that Sarge was talking about. The trend lower got invalidated above 92. Lastly, let me show you, Sarge mentioned the 200, the 50, here they are. You can see this stock's been strong. Indication here of the most recent run-up that we're seeing, the breakout this week here, holding above both of those closely watched moving averages, Nicole.
All right. What do you think of that when you take a look at this, Sarge? Do you agree to most of that?
Oh, sure. I mean, This stock has been so good to me, Nicole. I mean, my net basis in this stock is $58.73. That's how long I've been long this name. That's how good it's been to me. And I'm still raising target prices on this stock. It's incredible to me. I mean, if NVIDIA were to lose market share at the high end of the AI-capable GPU market, where are they going to lose it to? Who are they going to lose it to? They're going to lose it to AMD, maybe a little Marvell Technology, probably not so much Intel, but they're going to lose that market share to AMD. So I think the stock is wonderfully situated. Now, if the whole market takes a tumble, yes, AMD is going to take a tumble because it's almost gone parabolic of late. But even if I got out of my NVIDIA, I would not get out of my AMD.
I see. Okay. That's a good point. I'm glad you clarified that. Next up, Berkshire Hathaway.
All right, Berkshire B. I've probably given this one to you in the past because I've reiterated this one a few times as well. Earnings are due February 23rd. This will be the first quarter where Buffett has to report without his pal Charlie Munger by his side, so it's a little bit of a wild card. We're expecting adjusted operating earnings of $4.50 per share on $80.6 billion, compared to $3.06 a year ago on $78.2 billion. That's only about 3% revenue growth. But we just need to see that the firm is still hitting on all cylinders now that Charlie Munger has passed away. If you go to the chart, actually, I have a couple of charts here. If you go to the charts, you go back about two years and change, you'll see what I see as an ascending triangle from going back to late 2021 to the present. An ascending triangle, for those that don't know, is a quite overtly bullish pattern. Now, if you zoom in to just the 1 year and change chart, you're going to see a long upward sloping price channel that I've divided into upper and lower chambers. The stock has been mired in the lower chamber for about 3 or 4 months now, since September. I look for the stock to hang on to the 50-day SMA, which is $359. The central trend line now becomes my pivot. So my target price is $430, which I believe is conservative for economic reasons, because if the economy tumbles a bit, the railroads, Burlington Northern is going to suffer and hurt the overall performance of the company. The pivot point is $380, which is the central trend line. My add is down to the 200-day SMA, which is $345, and I would panic upon a loss of that 200-day line.
Right. Okay. And, you know, I sort of wondered, too, with Charlie Munger's passing, may he rest in peace. And so it's a new year, and obviously he was such a big proponent of some of the decisions that were made over the many years. He certainly pushed Warren Buffett to pay up for some great companies. Warren Buffett always noted that Charlie Munger would find the best companies, and even if they seemed like they were expensive to Warren Buffett, you know, Charlie Munger's idea was that you get what you pay for. Get a good company and pay for it, and it'll serve you well. And it has served Berkshire, obviously, well. Ben, your thoughts on the chart, please.
Bullish pattern in many ways, multiple time frames here, Nicole. Let's just begin with the more granular look here I have. It's actually an intermediate 1 hour candle chart. You can see high conviction on the left side of the screen. We're talking about sideways consolidation, a couple of areas that have formed at higher and higher levels. So it's a pretty well-defined trend higher here. Again, hourly candle chart, and we've got areas that have formed, 3 of them, 350, 358, and 365. We're going all the way back to the lows we saw around 330 back at the end of October. As I mentioned, most of the initiative-type conviction to the upside occurred last fall, and you can see how we've been mostly sideways since. But this is acceptance of the run-up. So again, very bullish pattern here right now, very supportive of Sarge and the fundamental breakdown that he provided. Let's take a look here, a step back. I've got a daily candle chart here queued up, so we can go all the way back to October of 2022, and you can see another situation playing out where we've got areas of value forming at higher and higher levels. So another well-defined trend here. We've looked at an hourly candle chart. We looked at a daily chart. You've got, in this instance, 5 areas of consolidation that formed. I wanted to point to the retracement we saw into the fall of last year, how this is not what the bulls wanted to see, right? After a run up to 373 to come all the way back to 335, 340, but look what held that area around 325. That's why we establish these reference points, right? Because it's kind of like the market's footprint, the path that it's taking and the direction that we're going to follow it if you're trying to participate in the trend. I want to step back one more time from this daily candle chart. Similar pattern when we look at the weekly. Nicole, this chart goes all the way back to 2008. Let me show you some of the areas that I noticed on the way up here. You can also notice that triangle pattern, the ascending triangle pattern that Sarge mentioned here, coming off the lows from 2020 all the way up to these highs around 373, but very well-defined trend playing out here to the upside, going back again to 2008. Lastly, Sarge mentioned some of the moving averages, so I figured I'd cue those up as well. You can see this sideways pattern again since the fall of last year, mostly below 73 and above that 335 area, but you can also see how we're holding above the 50 and the 200. And look, we've had a couple key tests of that level, which have speak to some of the strength we're seeing here, that's for sure.
All right, thank you. What do you think here, Sarge, as you take a look at that?
Yeah, I mean, I've liked Berkshire for a long time. Obviously, I can't afford the A stock because almost nobody can. So I'm in the B stock, and I've been in it for a while, and I'm going to believe in Warren Buffett until he gives me a reason not to believe in him. So if people would have stopped investing in him and in Charlie because they were getting older, they would have been out of these names for 10 years already. So while obviously the man's still very, very with it, very quick in the brain, I believe that Warren can do this until he either steps down or shows us that he cannot.
Yeah. Then we take a look here at Capital One, which is down about 0.9% this week. We heard from Discover, and that sort of tanked on its report. What are you thinking? Because as we're seeing consumer sentiment, actually there was some good consumer sentiment numbers. People are spending, but the concerns still loom about defaults and things like that. Where do you stand on Capital One?
All right, I'm short this name. It's the only short I'm giving you today. I'm also short Apple, Birkenstock, the sandal company, and Netflix. Earnings are expected next week. The street is looking for an adjusted earnings of 267 on revenue of 9.48 billion. I am looking for an earnings miss and probably a large provision for credit losses based on what Discover taught us this week. All right, if you look at the chart, the stock is coming off an October through December run that was spectacular. Relative strength is now neutral after having been overbought for quite a while. The daily MACD turned bearish right at the start of the year and has only gotten worse. I look for potential support to crop up anywhere between a 38.2 Fibonacci retracement of that upward move and a 61.8% retracement of that move. So basically between 116 and 105. I put my target right in the middle of that. My target price on the way down is $110, which would be about the halfway back point. My pivot point is $119, which is the 50-day SMA. Where I would short more, which on a long position I say where I would add more, where I would short more would be above 133 because that's my net basis. And where I would panic would be about around $143 because that's where I would be down 8%. And I probably have told you a million times about my 8% rule. I do not lose more than 8% on any position.
Right, that's good. That's a good rule too. But you had a list here of the names that you would short. You said Apple, Birkenstock, Netflix, and Capital One. And you are concerned about the earnings that are due out. Ben, take a look at the Capital One chart.
Yeah, Nicole, I was hoping we'd go 3 for 3 here. I still see some strength in this one. I can understand there is some concern when we look at the weekly chart. I'll show you where that comes into play. But let's just start here, first and foremost, with the hourly candles. And you can see another prime example, a trend up environment. COF is bottom left, top right. End of October, it was down around 88. We saw earnings. Look at that high conviction move up, higher highs and higher lows. And then we see this again, wash, rinse, repeat, staircase type pattern playing out. Recent pullback to 122.50, okay, not what the bulls wanted to see, right? Because we were balancing around 130. So again, we're kind of rolling over here a bit, but it does look to me like still holding above 115. That's kind of the key area I'd be watching here until I see that get taken out. Still a very bullish pattern playing out on the hourly candle chart going back to October, bottom left to top right. Now, let's fast forward here from the hourly into the weekly candle chart. And this is what I was talking about. Not necessarily what the bulls wanted to see, that move off 177.95, 178, we'll call it, but kind of looking at this as just one larger area of balance because as you can see, the price activity that we saw going all the way back to 1997, this is a stock that's very comfortable being in a wide range trade over a prolonged period of time. It wasn't until the pandemic that we actually broke out as that, well, rising tide lifts all boats in many ways. Taking a look here, though, again, just kind of fat cran approach towards the idea being that we're balancing around 130, holding about 55 is the key area on the weekly candle chart. I wanted to show you the moving averages, and where we are. You've got a daily candle chart here going back 1 year. 50 is the blue, the 200 is the yellow, and you can see we're holding above both of them convincingly. Now, Sarge mentioned RSI. I did take a look at that. We have rolled over. That is a bit of a concern through the middle of this range here, but still holding above some closely watched moving averages. And again, on that hourly, not what the bulls want to see, I would argue, rolling over, but still holding above key support here, Nicole.
All right. Good to see you both for the big three on this Friday. Really appreciate it. And, you know, I'm watching those shorts, too. I mean, Apple, Birkenstock, Netflix, and Capital One. Thank you for all of that. We had AMD and BRK as possible winners with Sarge for the big three today as well.